The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
All right. Whew. Good morning, traders. Happy Friday, everybody. We made it to the end of the week. We saw some things, did some deeds, some trading. Let's see how this thing finishes up. What we want to talk about for going into next week. What gets held? What would be your concerns about holding through the weekend, etc., etc. My name is Scott. I'm the head trading coach here at Tradespoon. I'll be your host for the live trading room stocks and options opening bell. Good morning, LK. Good to see you. Good morning. I think that's Mark who said Sir Scott of Utah. Did I get it right? I hope so. Good morning, Ted. Fantastic Friday to you. Dennis, good morning. Phil, happy Friday. Trading for a while, teaching for a while, longer and longer. The more gray I have, the more years I get. These are the risks, or these are the disclosures. There are risks. We know the story. We always have a plan. We manage our risk. We manage our psychology. Yeah. How's everyone feeling? Do you feel like you're trading well? That's the first question. Are you trading well? I think if I was to diagnose in speaking with someone, that's the very, when I'm coaching, it's different. When I'm diagnosing, it would be, are you trading well? Start with that. And then from there, where does it lead you? Because if you say no, we need to find out why. Why not? Bill said no. He said, to be honest, no, I love it. Yeah, there's no reason not to be right. It's a very funny thing how we can internalize mistakes. Like, oh, I did it again. We all do it again. Right? We all make that mistake. Damn it, I made it up. And it's okay, because it's like the more we are willing to say, okay, why? Let's process instead of getting upset and moving past it. Why? Let's stop. Let's figure it out. It's good stuff. All right. Hello to you, Charles. Howdy, Bob. Good to see everybody. Let's get cranking. So, what happened? Futures are up. We talked about the news coming out today. One of the Fed's favorites in its examination of inflation and inflationary pressures. We had already seen the Fed indicate that their analysis said they may be almost done. So there was something that they saw already that said that it's softening enough that they don't think they need to keep going, because, of course, what we've already done has caused some stress in the financial sector, right? We've seen that, and certainly it seems like that's shored up, but do you want to keep putting additional stress, right? So to me, I think, yeah, at this point, the next Fed meeting, I'm expecting nothing. They're going to let it go, especially with this inflationary report. So we've already seen, let's talk about the things that we've seen. We've seen technology move into a leading position. Apple, Microsoft, chips. We've seen that happen. We have seen the VIX de-escalate, right? We saw that happen. We've seen communication services on the bandwagon, and a little bit of participation coming from the consumer sector. I'm going to say consumer because it's including both discretionary and non-discretionary. It's I find it interesting the way it's moving. Obviously, the financials have gotten beat up, but here's what I'm going to say: there's opportunity there, right? We can't just be like, oh, now the whole sector. It's not 2008. I know we're all kind of feeling PTSD and feeling triggered, right, or something. But it's not the same. And so, as you look at it and you evaluate Okay, yes, we've absolutely seen it's already been, those banks have been accommodated. The FDIC did what it needed to do. The Fed stepped in, so they're on the lookout for it. And I don't know. I think once we get a little further, no more interest rate hikes, no more failures. Yeah, the financials will jump on. So think about what would you need to see from a reversal standpoint. We talk about reversals. How much momentum do we need to see buyers generate before we say, okay, yeah, let's go? Because they're discounted. They're down 20, 30%. And all of them that survive are going to be just fine. And the market's going to realize that. And off we go. I hear you, Bill. I hear you. Okay, so what do we have? S&P futures up 0.36, Dow almost 0.5%, NASDAQ only about a quarter, and the Russell the most at 0.65. The Russell, which we've said, wouldn't it be nice if they could catch up a little bit and just show that last all these pieces of a puzzle. It's a bullish puzzle. The more pieces we get in place, the more likely we have that sustainable trend, right? We would love to get back to where it just can be a nice bull market without all the other things, right? Like post-COVID now, where even the bull markets felt a little like frenetic. So yeah, why not now? Key inflation gauge tracked by the Fed slowed down. Putin's getting nervous about Russia's economy. Boy, you'd have to be with natural gas. Let's talk about that. I'm going to pull up the NG futures contracts. These are natural gas. So this is the price, right? Back here when it was at 7, life was pretty good, right? You're selling a lot of gas. Well, not a lot, but the price is there. Now that's down at 2. Woo, man. It is interesting to me that it's that. Well, I don't look into the driving factors behind it. I don't study individual markets very often, but there are times where like I want to deep dive to understand a little better why that dropped so much. I do watch it because I think this is going to reverse. I think it lived around 4 or 5 prior, to the Russian thing. So a lot of upside potential, in my opinion, something to keep an eye on. All right, let's go back. See if there's anything else going on. That's the news. Let's take a look at the economic calendar at the exacts, and then we'll look at going forward. So was it like this huge drop? No, income did slow, but not as much as they thought. So we were 0.6 last month. The expectations were 0.2. We got 0.3. All right. It's a nice little bonus. Spending dropped a little more than expected, but again, that has to happen. Spending has to slow down, sales have to slow down, or inflation will not slow down, right? Remember that this is a cause and effect thing. The Fed is doing what they're doing. Everything is happening in order to cool it off, to slow it down. So we can't be like, oh my gosh, the sales are down. Of course they're down. What did you think would happen? Of course spending is down. That's the intended effect of what's going on. So yeah. What else is there? The PCE index, as expected, 0.3, which is down from 0.6. And then here we had, and I believe it was actually supposed to be 0.4. They don't have it. I believe it was supposed to be 0.4 and came in at 0.3. So better than expected. Same with year over year. Expected at 4.7, came in at 4.6. That's it. Like if they can continue to see, even if it's slow, they're okay with slow. I don't know. Maybe they would do one more quarter point if it was too slow, right? If it seemed to taper off, just to make sure it gets back down where it needs to be. Okay, that's the economic foundation. Let's just take a quick peek at how Stella sees things. So now the projection is still bullish. We still have a bullish projection, but it's saying there could be this consolidation. Great. Let's trade understanding that. It could just as easily continue moving a few more days, in which case the projection will still kind of give the same idea, right? The model will give the same idea. Overall, what are we looking at? Higher highs and higher lows. Developing that perspective into an uptrend. So again, another component of what we see that we put into what we do. QQQ, same thing. And this is what I was talking about, right? It may just show up where it's saying, oh, there may not be a consolidation. The model has picked up on something that says there's a little bit of slowdown, but certainly we know that it's not a crystal ball and it's going to adjust if and when the market, if the market does continue. Here's the IWM. There's been a lagging here. And now look, we said, wouldn't it be nice, right? If it was down here, but it wasn't selling off, and it's saying, oh, maybe it's not. And now it's picked up on the fact that the sellers who had been absolutely in control, you can see it clearly there. Or if when they don't come, it shifts that projection to that bullish fashion. That's exactly what we've been talking about, looking to see, and here it is showing up. DIA. Oh, I didn't even hear the bell. My speakers must be turned down too much or something. Did you guys hear the bell? I didn't hear the bell. I'm like, how much time do we have? None. It's already open. Good morning, Fred. Good to see you. Good morning, Raymond. Did I say that already? If I did, get it twice. Micron. Oh, we'll go look at MU. Same thing. Bullish, right? As of now, saying a consolidation is definitely is in the cards. But if that consolidation doesn't come, it's not a big consolidation. If it doesn't come, if it just sort of goes slowly, then it does one of these instead, or it could just continue along the same lines. Overall, the model is definitely contributing to a bullishness, right, in the market. We know that we've been seeing we're in the midst of what is one of the better cyclical times in the market. Late March, early into April, all the way until May. Okay, great. If it's gonna rally for the month, we're here for it. We're ready. We're talking about it. We're putting trades on, looking for opportunities. Where's the money going? All right, let's go take a look at the open. Okay, let's get to the SPY. Let me get my watch list. Oops, that's not it. Yeah, look at that. Almost 0.5%. Good start. So we have a couple of levels here on the SPY. So just broad-based. The first one is pretty close to where we are now. I would say right around, yeah, what's my chart here? Let's go back to 6 months. Yeah, we're there. I mean, maybe 405 to 409. If we can get through that, I think the next level is around 415, right up in this area here. So that's the question. Does this thing keep moving? We don't have a lot of volume, but you don't need a lot of volume if there's not a lot of sellers. Right? That's what's important. If you don't have a lot of sellers, the buyers don't need to we don't need above average volume on buying days, right? That's not well, for me, it's not. If someone has it, they're going to be disappointed because you don't get it that often. You'll get the volume early in the transitions, which we already saw in this little tug of war here. We saw that. You can see there was volume there. What was happening? It was a big struggle between the buyers and the sellers. Look at it. You can almost feel it. Look at that. And then what? It was up, it was down a little bit. It was like they're pushing, and then now what? The sellers gave it 2 days, didn't do much. The buyers just now are like, oh, we're coasting now. The sellers have capitulated. Oh, it looks favorable. So, could it stall out now? Yes. So, would you start thinking soon about the possibility of locking profits in, maybe a third of a position, just sure, absolutely, that's valid. If you say, I like the way things look, there's a lot of bullish factors stacked up, I'm going to see if it goes ahead and makes that push, that gets to 415, then consolidates. Now, if it happens in that fashion, resistance, we come down, we stabilize, we go up, we get back to 415, 418-ish, right? There's that first trade we caught. And then a little consolidation down. What do we have here? It looks like a cup and handle to me, cup and handle. And then a breakout. Yes, again. And remember, here's May. There is a psychological thing about May that we want to be aware of, but there's opportunity in front of us. It's how do we prepare for it? Now, you might be thinking that's my prediction, but remember what I say. If you want to be right, you better have more than one idea of what might happen. Don't think, yeah, this is scenario A. This is where I make good money, great reward to risk, everything's great. I want to make sure I have something in place for it. Then I need scenario B, and then I need scenario C, and then D, and maybe E. So we're not going to go through all those together now. We'll keep talking about them with our different trades. We need to get into the watch list. Let me erase my drawings. And we'll come back for the opening range in a minute. Let's take a look at old Micron. Yeah, I mean, it got hit. It's only 4%. 4%, not terrible. It has definitely impacted the sector, though. So the NVIDIA trade is minimally impacted, right? If you look at AMD, that was my other one that I liked. We ended up going with it. It's more impacted, down 2.5%. You can see it's shook. NVIDIA, this is why we want best in breed when we can, right? NVIDIA is holding up, but even now, let me show you. It's crossed. It's on the path. I'm okay with it. It's like, yes. It's not like, oh, that's it. We're out of here. Because it's still on this path, right? If it finishes the day down here, I might be like, yeah, I'm not carrying that through the weekend. It's a long day, right? And if that day resulted in trades actually even up a little bit this morning, if that trade did this by the end of the day, yeah, it's terrible. I know it's a mouse. Bear with me. That's a red filled in candle. Okay. If that's the end of the day, this is off the beaten path. That's not going to accomplish what we want. I'm not going to be like, well, what if maybe on Monday it gaps back up and does this? Well, that would be phenomenal, but I'm not likely to sit through it, because what if it does this on Monday? And when you look at what just happened, which one do you think is more likely, right? So if you've ever been caught holding on to a trade, yeah, you got to be thinking about why. Why am I carrying through the weekend? What does it have to look like? Well, with this trade, it has to look like this. We drew the line. We said this is what we're looking for. If it deviates, then what we were looking for is less likely to happen. So then you have to say, if it's less likely to happen, am I then willing to carry the trade over the weekend? Now, we did a spread on one, so that one has minimal time. We did we bought an option on the other. So the one we buy an option on, we better be able to say, this is why I'm willing to stay in this trade. NVIDIA, you can see, is barely down 0.25%. Looks great. Looks fine. No problem here. The other trade we have on together is Amazon. Amazon looks great. It's up. We're hoping it can. I don't think it's going to get an earnings jump, but if it could slowly move up and maybe get to the bottom, right? That level there, somewhere in the vicinity, I believe is what we were looking for. Great. Am I going to carry this through the weekend? Absolutely. It looks great. This is going up. The buying cycle is in place. Everything about this looks good. The Amazon, unless something dramatic happens, of course, is going to be held. And Amazon is actually where there was a long option. So easy decision there. Now NVIDIA might be somewhere on the fence. And if it's on the fence, but you did a spread trade and your time decay is minimal, it's a lot easier to say, yeah, you know what? If I'm losing, let's see what we're losing. I think I did it on a different account. I don't have it. I was on my laptop and I had it. Okay. Let me see if I can figure out real quickly the theta. Okay, so the theta of Amazon is about $7.50 a contract. So if you had 4 contracts, you're talking $30 a day. And so then it would probably be 32, 34, right? So it's going to eat some of it up. But the NVIDIA daily theta is minus 0.19, 19 cents a contract. So if you had 8 contracts, it's literally a dollar. You're losing $1. There's no time decay, right? Does that make sense? So if you have a long option, your decision-making process come Friday has to be more strict. If that's one of the reasons why spreads aren't better just because they're better. They're better because when you get to a weekend, it's easier to hold on to it because your theta is lower. That's an empirical quality about it. And why, if you're an options trader and you only buy options, you should definitely look at that as the next step. So those are the 2 trades. Hopefully that makes sense. So you can see that NVIDIA is actually very close to turning positive. Would love to see that thing get back on up to the line or even above the line, and then just right. That's the best, easiest way to trade or to manage your trade. We'd like to see some easier trade management circumstances. We've dealt with hard for a while now, right? Like it's not like it's been a rough patch 2022, and it's been a little better, but yeah, we deserve it. We've been patient. Alcoa, talking about that reversal process. So Alcoa had a consolidation line, pretty steep. It did now look like it's gotten above previous high. So at this point for me, I would say, yeah, the buyers have done enough that I'm interested. I'm not like, oh, I wish I would have bought it down here. There was not a signal there. That was just the first test. It hadn't broken anything. Now it has. Now the buyers have done enough for us to be like, okay, yes, I'm listening. What's the story? And the story we're looking for now is that on the selling side, so the buying cycle didn't say to get in. The buying cycle said, pay attention. The selling cycle, the seller's coming in, and it drops down here to 40 when it's been getting down to 38. Now, all of a sudden, what do we have? We've got this reversal process. That's what we're looking for. On any given chart that's had some kind of a correction, consolidation, bear move, whatever it is, at some point, we're looking for the reversal. And when the reversal comes, that's what it's going to look like for me. If it looks like that, I'm interested. Anything else, it's not there. If it just keeps if it drops and it just keeps dropping back to the low or even lower, then that tells me that the buyers didn't do enough and the sellers are still there. I don't want to trade into it yet. Simple supply and demand analysis, right? So, yeah, Apple, it's slowing down. And this is what we talked about. It's slowing down. You can see the slowdown. That doesn't mean it's done by any stretch. Adobe was always a little overbought for us. ADI, the buyers have done enough. If ADI pulls back, sometimes you'll see the semiconductors work on, sometimes they work like in step, right? Everybody's doing the same thing on the same day in the same way. And you're like, ugh. But sometimes you'll see divergences in different cycles. So if I see ADI start to move a little bit more independently and it pulls back and gives a higher low, I'd be like, yeah, I'll give it a shot. I like the chip sector right now. I like that it's participating. ADM, same thing here, right? Same thing here. We've talked about consumer staples also in place. There's this consolidation line. You can see you had this one and it never broke. It just kept going. Consolidating. Then it steepened a little bit. And then we had a double bottom. 1, 2. We broke the consolidation. We also broke above the previous high. Bing, bing. There's my dotted line. We broke it. And now what? Now we've seen the buyers do enough. If the sellers don't do much. So anything really above this line. So my zone, I would say, is somewhere like in there. Not like specifically for this, but you can see where this pattern is now one of the patterns that we're looking for. There's really only about 4 to 6 clear patterns at any given time. And most stocks are going to fit one of those 4 to 6 patterns. Look through your watch list and you'll see what I mean. It's not like every stock is a little different. It's like, oh yeah, this one looks like this one and this one. You could group them, right? You could say this is an A pattern. This pattern looks very similar to Alcoa's, right? They're very similar to what they're doing right now. So it's like, that's the A pattern. What's the B pattern? The B pattern is technology, right? They're moving up, they're slowing down a little bit. That's the B pattern, and so on. Right? So let's see what else we see. But yeah, ADM, willing to look at it. AMD, struggling a little bit off of the news of Micron. Amazon, we already have the trade. That's an A pattern. We're in it. We like it. It's fine. Here's a C pattern. This is the financials. You're going to see the financials have their own little fast, steep drop. And then a little bit of a sideways consolidation. So they've double bottomed a little bit, right? It hasn't. The sellers have stopped, but the buyers haven't come back yet. They haven't broken any consolidation or previous highs. This is just holding across the line. So we're in a basing range. What has to happen? It's got to pop it. Pop it on the drop, higher low. Let's go. If it rhymes, it must be good. It must be. Can I look at ANF? Yeah. Abercrombie. So there you go. Abercrombie's in that consumer realm, right? Like, yeah, it's flirting with wanting to really increase its participation level. C pattern, financials. You're gonna see what I mean as we go through this. We're gonna clarify them. ANF. Yes, right? That's an A pattern, right, Scott? Right? You see what I mean? It's there's the consolidation. There's the break. It didn't just break out of the consolidation, but it also took out this previous high empirically. Now what? Now we've seen enough to be interested, but I'm not like, oh, I wish I would have. I don't. We weren't sure yet, right? Now we wait for the better trade. The better trade is when the sellers come in and then fail, and then it just sort of opens the gates, right? Could this keep going higher from here? Yes. Is there a 2-to-1 trade? Probably not. Maybe. Is there a 3-to-1? Never. You're not going to get a 3-to-1 on this. They just don't go they don't keep going often enough or far enough. You're not going to get it. So what do? If you want a 3-to-1, you wait for the consolidation. You wait for the pullback. That's the better trade, in my very humble opinion. If you think, yeah, now it broke out and now I want to get in, you can see that there's decent volume, but it's not like breakout, smash through the roof volume. But we don't need it, especially if we wait to see the sellers fail. Once you see the sellers fail, volume's unnecessary. I don't care. It could be at 70%, 60% volume. I don't care. Doesn't matter. It doesn't need it because there's no sellers. If there's no sellers, and then it's easier for it to go up. That's what we're watching for in this little transition, right? We're seeing that shift in the tug of war. Yeah, when you say it seems weak, really think about what you're comparing it to. You're comparing it to the fact that, this was the previous time we attempted. So it's more. MNST broke out today after a long consolidation. Good. Yep. Let's take a quick peek. Hope this is making some sense. Yeah. Now this one you can see was like very sideways for just 5 months, 4 months. I mean, then finally here it did break out. I agree. Did it have any volume on the breakout? No. So again, the only possible way I would trade a breakout is if it broke out with like smashing volume. But even then I wouldn't. I always feel like that initial break was the first time where either the sellers were a little bit weaker and it popped up through there. It could go a little higher and then pull back. Now it doesn't have to hold, but I would look for it to hold the old level as long as so anytime you look at this, you have like a zone where you're like, if it turns around in there and you use your oscillators to kind of help look for these turning points, right, to occur inside of your zone over here as and a nice confirmation candle. That's exactly what we did. And then you look for the next move. That's it. That's what we're doing over and over and over and over and over. Find the money institutionally, sector rotation. Where's the money going? That's it. We're just looking for these patterns. Where were we? AXP? The C pattern? That's right. Okay, now here's another one. Well, I don't know. This is actually more the A pattern, right? Where the industrials are trying to break out of their little consolidations. Boeing's done it. Baba, Chinese stock, based on news, definitely if it pulled back, a trade would set up there. Caterpillar, same thing. It's taken out. So this is kind of an A pattern stock, right? It had a consolidation coming down. It popped. It's above. I think Boeing looks stronger. I think you'll see that John Deere is going to also fit into this mold. And there it is. I think John Deere looks a little stronger. But they're all the same basic pattern, right? You can see it. There it is. There it is. Now we're thinking when this thing fails here, pulls back, that's the pattern. Alcoa, Archer Daniels, Caterpillar, Boeing, Deere, they're all in that pattern. So if you're trading that pattern, you might decide I'm going to do a consumer and a industrial, right? And still try to allocate and spread the risk as much as possible. I hope this is making sense. I feel like so you can see here, oil seems to be stabilizing, but there's nothing to break out yet. There's nothing that's like, it did hit above a second bottom, but it's stalled at the same top. So that's not enough yet for me. Costco, I don't know. I liked it, but it's kind of, there's a weirdness about it right now. So I'm a little on the fence with Costco too, to be honest. I like other things that we've looked at, like Abercrombie and Fitch. DBC, John Deere, we liked it. Diamonds are popping. Disney's trying to make that same kind of a move. Here's another one, basic materials. So like Alcoa, kind of a similar chart there. FedEx is one that actually we talked about as a trade. This is one for me. I told you that I took it back in here on this first turn. It's just slowing down. The options were pretty cheap. this is one that I'm absolutely going to close some before the weekend, so that I lock what small profit is there, and then see, does it have more room, or do we need to shut her down? Costco, an iron condor, Raymond says on Costco. That looks probably like it's working pretty well. FXI, China. China has moved into that A pattern, that break the consolidation new high. I want you to notice we only have three. We only have three patterns. We have A, B, and C. Right? And depending on the sector is what pattern it's showing. Interesting, right? It's like that. Someone said there's only 6 stories. If you look at movies, books, there's only 6 stories, 6 basic plots. It's the same with trading. No, never more than that. It's really only 3 or 4 in trading. It's like, here's the plots. Gold. Gold's kind of on its own. That's an interesting one. Silver's probably going to be pretty similar. I don't know what to make of it. It's got some sideways volatility after a strong move up. I don't know. Gold hasn't traded. It just always seems a little wibbly wobbly to me. Google, someone gave us. Oh, now that's on it. This is communication services, and this is the other sector. So here's chart D, right? Here's chart D, and we don't know if there's anyone else with them, but yeah, this looks pretty good. This holds up. That's a trade. It's almost a cup and handle, right? We didn't quite get. You can kind of see we were up here. We came down, double bottom, broke out, back up. Small consolidation. This is lined up. This is lined up. Google is on the list. Now, if all of a sudden it sells off at the end of the day and it's back down here, then it's not. It's gotta have this hook on the stochastics. It's gotta have this turn on the candle. If this candle falls back below this candle's body, that's not the signal. Does that make sense? But yes. Who gave us? Is someone the person who gave me Google here today? Say hello if so. Looks good. I like it. So you'll notice what sector is it. People are like, oh, that's technology. It's communication services. It's a different sector. And you're seeing a slightly different pattern. There's pattern D, 4 patterns. Goldman. Interestingly, I would actually put Goldman more into pattern A than pattern C with AXP. IWM. Yeah, it's trying to join the A's. Jets, A pattern. MasterCard. I would say more of an A than a C, but right in that realm. I don't know how I would characterize Meta. Meta's just kind of moving. But you'll notice that Meta is with Google. It's communication services. So it gave a potential signal, but it's kind of in the middle. So that's an interesting one. It's not going to get its own. I'm not going to do it. Marvell, chip sector, kind of in the A group. Microsoft looks very similar to Meta, so maybe they do get their own if Microsoft is joining. Maybe that's pattern E, a couple that look like this. That they didn't quite get the pullback, but they certainly have a turn and are moving a little bit higher. Netflix, same realm, right? They're in that same vein. And again, Netflix communication services, NVIDIA looks good. Oh, where are we with NVIDIA? Did we get positive? 0.35% now. Excellent. Easier and easier to carry the trade. Oracle's kind of in that same pattern, communication services. The Qs look good. Starbucks, picking up some steam. Starbucks pushing itself into the A group, looking for the reversal. The more of those reversals that complete themselves, the more likely this thing moves into a true bull market, right? Silver, like I said, it's going to look similar to gold. Semiconductors looks pretty much in that, I would say, the D group, right? SPY. All right, let's look at the SPY for the range. It's gone quiet. Is everyone feeling all right? Did I put you to sleep? Are we mesmerized? What's going on today? Did we not have enough coffee? You know the rules about coffee. You know the rules. Strong open on the first candle. Slow down, but continuing to push. So yeah, I'd say the opening range is 4 to 4. 404 and a half by 405.75-ish. We're consolidating down. Yeah, I mean, if this thing doesn't come down and it breaks 405, I think we finish up somewhere between 1 and 1.5%. That's what I'm looking for. Somewhere between 1 and 1.5%, if that's what happens. Fred says, thinking hard on that Google idea, like it. I'm looking at the afternoon, as long as it holds up, right? And it looks like it's going to. So if you watch the hourlies even and you think, hey, it's really starting to break to the upside, I want to get in. The earlier you put it on, the more the risk that it could fail at the end of the day. So for me, it's closer to the end of the day. Bob says we are the boring morning gallery. Okay, so I'm gonna come clean. We had a really fun, just great session last Wednesday, and I'm like, the afternoon crew is more fun. Like the morning crew, everyone's tired, no one's talking. So I did call the morning crew a little boring sometimes. I'm gonna put it out there, you guys. A little more coffee. Okay. Where were we? I'm just saying. Can you honestly tell me you brought your A game today? If you say yes, I'll accept it. But self-reflection. It's a very strong characteristic. Thank you, Scott. Scott said good discussion. I hope so on patterns. I think Phil. Thank you, Phil. The patterns are so important. Ooh, look at that. See, it's holding actually. The opening range is holding now. The patterns are everything. Over and over again. It should be boring. Right? Shouldn't be like, oh, I'm getting so excited. It should be like, is it doing what it's supposed to do? Great. Let's trade it. Tesla almost got kicked off. I'm flirting with it every day, but it's just doing just enough to be like, well, okay, it's a little interesting still. Let's keep an eye on it. UNG natural gas, again, yesterday, a new low, 658, right? So here we're like in the 20s, and now we're down at 6. Where were we prior? So you can have, we looked at the we looked at the futures, right? The actual commodity price. This will just give you a sense, right? Because we had a ramp up around winter here. This was prior. This was really where we were right before the Russian conflict developed, right? That's 13. And then it shot up, and we traded a little bit of this. We liked the momentum there. Maybe both places. And then it just got crazy, and then it fell back down, caught a couple pieces. But it was always a little nerve-wracking. Yeah, I mean, we're lower than we were ever prior to this. So it's very interesting, this. Just to give you a little bit of reference. Visa's kind of with AXP. It's a C pattern. The VIX, even today, like we got to it, but it's holding this level here. It would be nice to if we could get underneath that level, then I think we could get down to 17, and that would mean we're pushing towards that higher level, right? That 115 level on the SPY, not just the 106 to 108 level. But it's a little bit of a support level here that's holding it a little further. We just need a little bit further. And then what we would love to see, if we can get down to here to complete this trade, then pops for a couple of days, We hold this 19 to 20 level, and then we drop, and then we hope that this can get on down here to 15. Because if this gets down towards 15, when we hit that point in May, when things have more of a tendency to go sideways, it opens up more neutral strategies for us. We can still trade butterflies. We can trade iron condors. We can trade calendar spreads. They're all on the table, and it makes it much easier for us to integrate some neutral strategies while we still try to find some direction. Just because they say sell in May, go away, doesn't mean we don't try to trade, right? It means there's less money flow, but we can still find it. And when we find it, we're going to trade it. But we also want to balance it with complementary strategies where we have make money when the market goes sideways. Okay. XLF. See, I'm telling you, it's already showing up. What might be showing up, you said? Steep consolidation. Oops. Coming down pretty hard and fast and steep. Now, I don't know. That's pretty iffy still for me from a group. The leading financials, things like Goldman maybe, or I can't remember the other ones now, but anything that got above the previous high, that might be the leader, right? Where it says it gets up to there, then it joins the reversal gang, right? Where it's like, okay, you can actually see it. You can see this phenomenon back here, right? This was the first time that it broke out and got to a higher point. Then it pulled back, and then it turned. That stochastics didn't come very far. So some people are like, oh, but it's so close. Doesn't matter. It turned, and then it gave you a signal, and then it gave you this trade here, nice trade here, and then it pulled back, and then it gave you another trade here. Not as good, but it worked. Then it pulled back, and it gave you another trade here. Again, if on this trade you had a small gain, a little better than a small gain, a good gain, great, that's one stock. What if you had 10 other stocks? Well, you're going to look at that month, and you're going to be like, that was a good month. No losers, right? No losers. Big win, medium win. I mean, that's what trading is. It's not going to just be like, oh, everything works great. I'm riding my unicorn through the gumdrop forest. I don't know. You get the analogy. You get the metaphor, I mean. Okay, where were we? Industrials. Industrials clearly has made its breakout. So we've been asking, are there going to be more sectors participating? More sectors participating means more market breadth. The more breadth we have, the broader base these momentum is, the more indicative of institutional money coming in. We know we've had that discussion. The more the more institutional money we have coming in, that's confirmation of indeed all the components, all the ingredients of a bull market. It's all in place. This isn't an opinion. This is what we see. We see these things happening, right? Now, of course, things could change. Obviously, something could happen that could be a catalyst. So we want to make sure we understand what would it look like. Well, we have mechanisms like a reverse escalation process on the VIX that would cause us to, because now it's hedging. Now, if you see signs, you hedge. You're bullish, right? So now the hedging component of your trading plan becomes that much more important. Bob wants everyone to know he actually rides a Pegasus, not a unicorn. So, at Bill's institution, the institutional money pays for padded walls, right? Love it. It's hilarious. Morning Cruise making a play. Staples. This is what I was talking about. The consumer staples, non-discretionary, had their little consolidation. It's clearly broken that. That's a little more, defensive than I would want. That doesn't like add an extra ingredient. It's a little bit of a detractor. It's like, oh, it's a little too much salt. Because it's a defensive sector. So it's like, I don't know. But if it's the more retail-y side of defensive, I'm like, oh, maybe. XLY. And there's the discretionary. So the discretionary's basically done the same thing. It's popped out. So that's why I'm saying consumer. I'm open to consumer. Consumers coming into place and industrials coming into place. We already have communication services and we have technology. 4, right? This is slightly different. Some of them are just moving into place with the reversal A pattern that we saw today. But you can see, what did we come up with? We had 4 basic patterns. Then we had one that just kind of was on the outside of that, A, B, C, and D. And everything sort of fits into that. And they fit into that most of the time based on their underlying sector. This is what you're going to see over and over again. And you can see that this fits into the posture we've been developing about, why are we more bullish? It's not that we have a feeling. It's that we have a number of analyses we conduct to see very specific things that must be in place in order to ultimately label it as more bullish or more neutral or more bearish. And everything we do comes from that. So what are we looking for? Next week, what we're looking for is if this does, right, I think we're looking still for a little bit more upside. Then if we see that consolidation, we're not going to just have technology and communication services to look at. We're also going to have industrials and some consumer. And then the next wave up, we're looking to have, 6, 8, 10 positions, whatever, you're comfortable with risk. You start to take more risk, the more bullish it gets, because you're spreading that risk across multiple sectors and you're able to have that in place. If we get to that point in May where it starts to go sideways, we start to implement neutral strategies, butterflies and calendars for me. And in that case, we could have both going simultaneously. So it's either more bullish and we're making more money bullishly, or it eases a little bit and we have both neutral and bullish working. Well, let's see, right? And as good as it ever gets, what are we always doing? We're always looking for those really early. Remember that if you're bearish signs, if everybody sees them, they're not worth very much. We have to have mechanisms that we can see that are early. It's subtle. That, to me, the VIX provides the best possible. So we'll be watching that, obviously, and go from there. What time is it? We're almost done here. Let's take a quick peek at the SPY. Google, that's the one for the day for me. Everything else is managed fine, and we have a plan for it. Here is so it's just kind of basing a little bit there. It could pull back as long as it doesn't break the low. If it pulls back a little, pulls back to 405, and then why 405? I love the middle of big candles. I love to go to the middle and just kind of put my line and say, all right, if that holds, better. What would cause me to get out of the NVIDIA trade today? If it drops, right? If it drops. That's if it'd have to drop though. But so remember, there was bad news for Micron. It gapped down. It had a little bit of an early impact. So there you go. So the S&P still looks like it's pushing for a bullish day. And let's back out of this and hit the VIX one more time. We'll see if the S&P can break that base to the upside and get a little bit more, and this thing can ease below it. I think that could give us a little carryover to another bullish day, Monday or Tuesday. So, yeah. All right. Yeah, it was pretty good today, morning crew. It was pretty good. Maybe you guys were just burning out with me. I don't know. I don't know what it was. We're going to let bygones be bygones. We're going to move forward together collaboratively. I will be back. I won't see you guys in the morning for a week. Next Friday. We're we're spoiled this week. I'll see you Wednesday afternoon. So you really think about some of these signals that we've been thinking about today. I'll see you Wednesday afternoon. Bill says it's about time for my breakfast hot dog at Costco. $1.50. Don't forget the soda. Thanks, Raymond. Good to see you. Have a wonderful weekend, everybody. Be safe. I'm traveling to Oakland. Well, not Oakland, Pittsburgh, Antioch, California area for a soccer tournament with my daughter, but we'll be back Tuesday, so I won't be on the road when we meet Wednesday. So I hope you guys have a wonderful weekend. I hope the weather's nice. See you soon. Happy trading.